Hey everyone, welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So in this video, we're going to talk about a lot of comments that we've got throughout the weeks with regards to Cybertruck, with regards to FSD, AI advancements at Tesla, and then some numbers out of China and Europe as well. And as always, at the end of the video, we're going to have a look at the Tesla stock. So first up, let's start with the weekly China insured numbers. They came in at 12,300. The quarter is now down 25.7% quarter over quarter. Year to date, it's down 3.9% year over year. As for the model mix, Tesla sold 3,186 Model 3s and 9,405 Model Ys last week. Model Y was the best-selling vehicle, and not only BEV or NEV last week. But then we had this report from Bloomberg. So Tesla trims output of cars in China amidst lower EV sales growth. Since mid-March, staff told to work only 5 days a week. US automaker produces Model 3 sedan, Model Y SUV in China. Tesla has reduced electric car production at its plant in China, according to people familiar with the matter, amid sluggish growth in new energy vehicle sales and intense competition in the world's biggest automobile market. The US automaker earlier this month instructed employees at its Shanghai facility to lower production of both the Model Y sport utility vehicle and Model 3 sedan, the two types it makes in China, by working 5 days a week instead of the usual 6.5 days. The production lines run on 2 daily 11.5-hour shifts, which remain unchanged. The output trims were made starting earlier this month, the people said, and staff haven't been given a clear update on when production will go back to normal. Now, I would like to add that this is not specific to just Tesla. The whole China market has seen a slowdown. Xpeng, Li Auto, they've all seen a slowdown. So this shows this issue is a China market issue. And this, of course, reaffirms the point of, well, Q1 is just not going to be a great quarter for Tesla. Despite us now seeing some positive numbers out of Europe, which we're going to talk about in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, weakness out of China. We know this is not Tesla specific. Q1 is just not going to be a great quarter. We know that already. The stock reflects that as well. The only thing here is how bad the results will be. I think that's part one of what will happen when Tesla will report production and delivery numbers. Part two is going to be the earnings report, margins, and especially the comments made in the earnings call. Only after that do I think we're going to see the Tesla stock move quite strongly, or on the downside or on the upside. But moving to Europe, Tesla sales were up 41% in the first 2 months of the year. This is more than any brand in the top 20, while 5 competitors ahead of Tesla actually saw a decline. Of course, last year was the flattening of the wave, so that 41% increase year over year definitely seems a bit more positive than it actually is. We can even look here at some more numbers, not just for Tesla, but for a lot of other competitors out there, most of them in Europe. You can also see that in February, Tesla grew 15.2% year over year. Tesla's market share in February grew to 2.5% across all types of vehicles. So that's BEV, ICE, hybrids, etc. And 2.1% year to date versus 1.8%. Now, of course, as we move closer and closer to the end of the first quarter, we're going to get way more numbers coming out of Europe, coming out of China as well. And then, of course, eventually we're going to get the actual numbers, production and delivery numbers from Tesla, and that will definitely give us way more context than what we're just speculating about right now. Now I want to switch over to a bit more speculation, let's say, and that's with regards to Major's post here with regards to Tesla's super service as a software package. This is just him putting an idea out there, which in my opinion is actually a pretty good one. So it says here, offer insurance for 2 drivers assuming good safety score, premium connectivity, unlimited supercharging with basic limits, priority service like Apple Care Plus, full self-driving, and 0% auto financing rates for $399 per month. And then continue to say here turn Tesla into a SaaS beast, I bet we can convince 1 million Tesla owners in the United States to subscribe, or $1.6 billion in ARR with over 50% gross margins, bundling high margin but nice to have FSD with must-have insurance and charging can increase the take rate significantly. And to be honest, I think this makes a lot of sense. A lot of sense, actually, especially for this price. I've seen some people talk about, well, would you pay $100, $200 per month plainly to use FSD, yes or no? In my opinion, just for FSD, $200 is quite expensive. Even if you go and drive daily to work and back home, $200 per month, still for something that you don't even know, right? You don't know if you will use it a lot, you don't know if it works perfectly or not. So of course, some people say, okay, but then you have a 30-day free trial or something like that, and then you can decide. Okay, but I do think that this type of package, where you get the people basically in the Tesla ecosystem, like the Apple ecosystem, you get them in the Tesla ecosystem, $399, I think this is an offer you can't refuse. But of course, do share your thoughts down in the comments below. Now, moving on to the Cybertruck. According to a video from Brad Sloan, he recorded 370 Cybertrucks spotted at Giga Texas today, to which Elon Musk here commented production is ramping. We also know that Elon Musk said in the previous earnings call that the Cybertruck will not be profitable up until 2025, but we also know that, well, the Cybertruck, it's more expensive than some other models that Tesla is selling right now. So the mixed ASP is probably going to be higher for this quarter, in my opinion, not by much, because, I mean, how many of those have they delivered so far? Probably not so much to move the needle, but in the coming quarters, that might change. Why is that? Well, because Cybertruck on X here has said they produced over 1,000 Cybertruck worth of 4680 cells at Giga Texas last week. This is also some positive not just for Cybertrucks, but for the progress they are making in the 4680 cells. Then moving on to Tesla Bot. It seems that each and every week now we've got some news with regards to the humanoid robot industry. Lots of companies, suddenly lots of startups popping up with their own versions of a humanoid robot. But for Tesla, they've been working quite hard on that for quite a while. And we have now found here a job listing, Technical Program Manager, Tesla Bot. To drive the deployment of robots for trial application, execute pilot applications of humanoid robots in various manufacturing environments, cover multiple job sites, and may require frequent travel. Remember last week, I'm actually surprised we're not getting an Adam Jonas blog post this week, but remember last week when he talked about the fact that, hey, making humanoid robots work in factories inside, in-house, in people's houses or in their own houses for Tesla, for example, is going to be way easier than releasing FSD, basically computer on wheels in the wild, everywhere, always. So the progress made here on the Tesla Bot could be surprising to some. Then with regards to Tesla AI, Robert Scoble here said Tesla AI is very underrated, had 2 AI founders while my car drove us through San Francisco. If you have a friend with FSD, beg them for a ride. If you think Elon Musk has competition, you are simply wrong, there is none. To which Elon Musk here answers, yeah, 99% of people have no idea, and improvement will accelerate dramatically now that we are no longer AI training compute constrained. And if you've been paying attention with everything that's going on in the AI space, you know that things are moving extremely, extremely fast. So it would not surprise me that if by the end of this year, FSD is going to get extremely, extremely close to perfection. Not just for driving, for parking as well. I mean, the whole shebang could happen or could happen next year as well. But the things now are moving extremely fast. Then we've got this picture here with regards to the Tesla V4 Supercharger. Esther Kokelmans here found out that the first ever branded Tesla V4 Supercharger is a fact, located in the United Kingdom. This is branded by EV Point. We've previously talked about a partnership with BP, but so far nowhere to be seen. The last thing here is the graph. I'm starting here on the weekly. Last week was a big red candle, but it does seem like 160 did hold. This week was greenish / neutral. We ended the week at around $170. RSI is still pretty low. The 200-day moving average sits at $218, the 51 at $195.7, and the 20-day one at $181.4. Again, I do still think that the stock will have a major move much closer or at the date of production and delivery numbers or the earnings call. Because right now we're talking about the progress that we're seeing throughout the quarter or no progress that we're seeing in the quarter. We've seen the numbers, we've seen the speculation with regards to FSD, stuff like that, Cybertruck ramping up. That's all fine and well. But Wall Street is focused on profitability. Wall Street is focused on, are margins getting worse or are margins getting better? What is Elon Musk seeing? What is the team seeing? Are they seeing things that are going to get worse? Are they seeing things that are going to get better? That's what Wall Street is interested in. Wall Street is forward-looking. Wall Street is forward-looking. I mean, 12 months out from now, not decades out, like retail investors. So that's what Wall Street is going to be looking for in the next coming weeks and in the earnings call. If they get some positive news, they'll react accordingly. If they get some negative news, they'll react accordingly as well. What we can do is just continue to do what we've been doing for quite a while, look at what the business is doing, and if the stock gives us a great opportunity, we or I personally will continue to accumulate more and more shares. This still remains my number one position by far. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.